Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host Desmond, and today we're diving into the chaos that's rocked financial markets since Liberation Day, and what it might mean for the future of global trade tensions. Buckle up, because it's been a wild ride. Let's start with the big picture. Financial markets fell into absolute turmoil following Liberation Day. For those who might have missed it, Liberation Day, marked by a series of unexpected geopolitical announcements, sent shockwaves through the global economy. Investors were caught off guard as trade agreements, tariffs, and supply chain policies were thrown into question. Stocks, bonds, commodities, you name it, nearly every asset class took a beating. Right, the S&P 500 dropped over 8% in a single day, its worst performance since the 2020 crash. Emerging markets, already fragile, saw double-digit losses in some indices. Even safe haven assets like gold and US treasuries weren't spared, with gold sliding 5% and treasury yields spiking as investors scrambled for liquidity. Right, it was the kind of market chaos that made even seasoned traders sweat. Right, but why did this happen? Liberation Day wasn't just a symbolic event, it signaled a potential reshaping of global trade rules. Right? Countries that had been locked in escalating tariff wars and sanctions suddenly faced new pressures to either double down or negotiate. Right? Uncertainty breeds fear, and fear breeds sell-offs. Right, so that brings us to our second point. Volatility and panic surged to levels we haven't seen in years. The VIX, often called the market's fear gauge, spiked above 40, a threshold that screams investor panic. Currency markets were a roller coaster. Safe haven currencies like the yen and Swiss franc surged, while trade-sensitive currencies like the Australian dollar and Chinese yuan took a dive. Supply chain disruptions, already strained by years of tit-for-tat tariffs, sparked fears of shortages in everything from semiconductors to agricultural goods. The panic wasn't just numbers on a screen. Businesses froze hiring, consumers tightened their belts, and central banks were forced to issue emergency statements to calm markets. Now, social media, especially posts on X, lit up with reactions. One user summed it up: "Markets are bleeding and no one knows if this is the bottom or just the start." Another wrote, "Trade wars are killing my small business." Right? When does this end? Right? The human toll of this volatility is real and it's global. So where do we go from here? Could we see global trade tensions de-escalate in the coming weeks? And that's the trillion-dollar question. There are reasons for cautious optimism. First, history shows that markets often overreact to geopolitical shocks before stabilizing. We saw this after Brexit and the US-China trade wars peak in 2019. Second, there are early signs of diplomacy at work. Recent posts on X mentioned back-channel talks between major economies, with negotiators hinting at tariff rollbacks to stabilize supply chains. The G20 summit, scheduled for next month, could be a turning point if leaders prioritize cooperation over brinkmanship. But don't pop the champagne just yet. De-escalation requires trust, and trust is in short supply. Some nations may see this chaos as leverage to push harder for concessions. Plus, domestic politics, like upcoming elections in key economies, could keep leaders focused on looking tough rather than making deals. If talks stall, we could see another wave of volatility, with markets pricing in prolonged trade wars. Here's the bottom line: the path to de-escalation is possible, but it's not guaranteed. Investors and businesses need to stay nimble, hedging against worst-case scenarios while watching for diplomatic breakthroughs. For now, markets are on edge, but history reminds us that even the stormiest trade winds eventually calm if leaders choose pragmatism over pride. That's all for today's episode. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.